Greetings, YouTube. The doctor is in. Dr. Urias Papers here, coming at you with another commentary on Dungeons and Dragons. And today on the doctor's Dungeons and Dragons channel, we're going to talk about something that happened today, something that affects the hobby that we play in, something affects the game that we play, and that is Hasbro released its fourth quarter results. We're going to look at this article that came out of CNBC. We're going to look at the PowerPoint presentation that Hasbro put forward today that breaks a lot of these down. But first, don't forget to hit that subscribe button. If you like this video, hit the like button. If you have any questions or comments, please leave a question or comment. And don't forget to hit that notification bell. So, at 8:42 a.m., here it is right here, Eastern Standard Time today, Hasbro reports 20% revenue drop and issues downbeat 2024 outlook. Now this, if you don't know, Hasbro owns Wizards of the Coast. Wizards of the Coast owns the rights to everything that is Dungeons and Dragons, in addition to Magic the Gathering. All right. Toy company Hasbro reported a more than 20% hit in its fourth quarter revenue and issued a downbeat 2024 forecast. So, for those that don't know what this means, earnings per share is how much profit they reported per share, and they reported 38 cents per share, and it was expected to be 66 cents per share. So there is a company that does estimates for different other companies on what they think is going to happen. If that estimate is lower, then the stock price gets hit pretty hard. And usually what happens is a company will meet that number or be above it by a few cents, not very much, or they'll be below it by a few cents. If they're below it by a few cents, then it's still very bad. The stock market looks at what's going to happen in the future, not what happened in the past. And this number being above the estimate means that things are good with the company and the company is doing better than experts think. But with the number being lower, then it's not doing as well as the experts think. And therefore, there's something more going on with the company. Now, this number is really low. It is almost half of what was expected. Revenue, which is the money that the company brings in. So revenue is the raw money they bring in. And then when you subtract all the costs of the company out, what they have left over is their profit. So it was expected that they would bring in $1.36 billion, and they only brought in $1.29 billion. So they missed that expectation as well. It says here for the last 3 months of 2023, Hasbro lost $1.06 billion, or they lost $7.64 per share. That means if you are a shareholder and you bought the stock at $107.64 3 months ago, you would now be at $100 and you would have lost that money. Drastically wider than losses of $128 million or 93 cents a year earlier. So they look at what happened a year before this. They only lost $128.9 million a year ago for their last quarter in 2022. And between the last quarter of 2022 and the last quarter of 2023, they lost $1 billion. That is a lot. So after major adjustments related to goodwill and intangible assets, the company reported adjusted earnings per share of 38 cents, still well below the analysts' estimate. So for the full year, revenue declined 15% to $1.29 billion, including double-digit sales drops in its consumer products and entertainment segments. So consumer products are toys. Entertainment segments are like the movies and the TV and all that shows and all their intellectual property rights. Hasbro did see an increase in revenue, however, in its Wizards of the Coast and digital gaming segment, primarily due to licensing revenue related to Baldur's Gate 3 and Monopoly Go, There you go. That's telling Hasbro that they need to put all their eggs in one basket, and that basket is digital stuff. The company reduced its inventory by more than 50% compared to the year prior. That's how much stuff they have on hand. And then they talk about what they're going to expect in the year ahead. So the company expects a 3 to 5% revenue dip, so it's going to go below that, $1.29 billion, coupled with a 7 to 12% hit to the consumer products business. Again, that's the toys. The company expects overall adjusted earnings before interest, taxes, and depreciation and amortization of $925 million to $1 billion. The company now expects to cut $750 million in costs by the end of 2025. And where are they going to cut that? They're going to fire more people. That just bottom line. Bottom line, they're going to either dump products that they make so they don't have to make them anymore if they're not profitable, and then they're going to get rid of people that are involved in that. So, which that number, $750 million, is up from a previous target of $350 to $400 million. Essentially, they have doubled the amount of money that they are expecting to cut. And then they say in December they laid off 1,100 employees after it had already cut 15% of its workforce earlier, which was in January. Now, here is the PowerPoint presentation that Hasbro puts out for their Q4 FY23 earnings, which came out today. And so here's the $1.3 billion reported, and that's what it was adjusted for their revenue. That's yearly revenue. Operating loss, there it is right there. So $1.199 million, that's $1 billion. That's $1.2 billion. Minus the plus that, net earnings loss $1.06 billion, and there's the 7.64 that they lost right there, and earnings per share is 38 cents. So we can break this down even more. Full year is down 15%. Operating profit is down, so when it's in parentheses, that means it's negative. Adjusted was positive, and that is primarily due to Wizards of the Coast, but it's down 48% from a year ago. Net loss, net earnings, so their net earnings were $349 million. That is not very much. They have a lot of debt that they have to pay off right now, and I think that is in here. So full year inventory down 51% below 2019. What else did they say here? Full year growth in Magic the Gathering, Dungeons & Dragons, and Transformers. Strong contribution from launch of Furby. So adjusted operating profit, $477 million. So Hasbro's transformation refocus on play. So enhance Hasbro's gaming leadership, both tabletop and digital. We're going to see more digital. Double down on fewer, bigger brands. Drive new growth through direct-to-consumer and licensing. Direct-to-consumer means not selling products in stores, but selling products to you off their website or digitally. And licensing means they're going to license out products like the news stories that we heard about them selling rights of Dungeons & Dragons to a couple of video game companies. Focus on bottom line performance, deliver operational excellence, target 20% adjusted operating profit margin by 2027, invest to drive profitable growth, de-lever balance sheet, that means get rid of debt, and maintain investment grade ratings, return excess cash to shareholders, that means dividend payment, fourth quarter and full year. So they're putting out products that they think were profitable. Lord of the Rings, Magic, Baldur's Gate, the video game, Monopoly Go, Play-Doh. So these are the things. Okay, so this is the big one right here. Wizards of the Coast revenue was $363 million, and they brought in $103 million. They were up from the previous year 7%. Operating margin, this is profit minus costs, basically the difference between those. 28%, 30%, which is actually pretty good. That means that they are bringing in 28% more money than they spent. Operating profit versus the previous year loss minus 1%. So here's where the bad one is right here. Entertainment, $1 billion, and consumer products, $126 million. So all in all, it's and then corporate and others is $66 million loss. Operating margin in consumer products, that means this costing them more than they're actually bringing in. And there wasn't any change in that one. So versus the previous year, 49%. So they got a lot of money that was tied up in entertainment. All right, fourth quarter performance as adjusted. I mean, these are just the adjusted numbers. So Hasbro full year. So for the year, Wizards of the Coast and Digital Gaming brought in $1.48 billion. Higher 10% from the previous year. Operating profit, so this minus their costs, is $526 million. I think most of that is Magic the Gathering plus probably like Baldur's Gate video game stuff. But entertainment brought in $659 million, and it cost them way more than that. Way more, which I'm going to imagine some of this is probably debt. And performance readjusted. So brand portfolio performance. I don't think that really, we're looking for action figures and accessories. That went up. Arts and crafts went up. That's Play-Doh. Games went down. Preschool toys went down. And this is like Nerf. That went up by 0.9%. So these are big. These are pretty big losses. And operational margin. So royalties were down. I'm trying to get to where they're going to show their balance sheet here somewhere. So here is the total Hasbro-owned inventory reduction. This is how much inventory they have. So there's the reduction there. Wizards is down 30%. That's probably cards and books. That is probably cards and books. Consumer products performance. So they're all down for Q4. And for the FY, they're all down. Toy and game volume is down. Toy and game rate mix is down. So they're not doing great. Now here's Wizards and digital. So Wizards tabletop, that's us right there. Wizards tabletop minus 1.3 for the quarter. That means people were not spending money on Dungeons and Dragons. But they did spend money on digital gaming licenses, which that is going to be the Baldur's Gate stuff that they sold, the gaming license they sold. Digital games is down 1%. Wizards tabletop overall, which is Dungeons and Dragons, I'm going to guess that this is probably also Magic the Gathering. That is up 0.1% for the year. So we had a dip, and this was over Christmas. Got to remember that. That was over Christmas. And so there's the loss, cash flow metrics. They actually have more cash than they did last year. So here's their guidance for 2024. They're expecting another 3 to 5% decline in Wizards, and digital gaming consumer products is 7 to 12%. But they are expecting a 38 to 40% operation margin for Wizards. I don't think... Here we are. This is what I'm looking for right here. Here is their liability sheet. Liabilities means debt. So, assets. Total assets right now. Well, total assets as of Christmas 2022 was $9 billion, and now they had $6 billion. And now it is at... And liabilities was total liabilities. So these were pretty much equal, and they're equal. They have that much in debt. That is amazing. So, it is, there's their operating loss right there of $1 billion. And they owe a lot of money. Long-term debt, total current liabilities, $2 billion. Long-term debt, $2.9 billion. They got other liabilities. Total shareholder equities. It's funny how these numbers are equal, but they are. So they've got a lot of debt. Total liabilities, $5.4 billion. That's a lot of debt. Consolidated cash flows. So this is the amount of cash they have on hand, which is $725 million. And that is not enough to pay that. And I'm wondering what their payments are that they have to pay and their payment plans are for that. So all in all, doesn't look great. But check it out. It's on CNBC. If you want to look for it, you just go to CNBC and you go up to the search up at the top and you put HAS and you'll get right to it. And that's what I got for everybody. I appreciate everybody tuning in, and I will catch everybody later.